W-2s and 1099s are rolling in so that we can do our taxes. Joining us for this morning's U.S. Bank Economic 360 is Senior Vice President and Senior Portfolio Manager Mindy McLaughlin. She joins Business Watch producer Kelly Leon. Mindy has some insight to help guide us through a financial checkup. Mindy, Kelly.
Thanks, Allie. I wish we had done this last week, Mindy. I actually did this week.
Oh, did you really?
Oh, this is, yeah, not fun.
No, it's good.
It's good. The first question, which I should have asked you last week, what do you need to pull together to get this going?
Sure. I think this is a great time of year to put together what's called a personal financial statement. It's really a picture of, your total financial picture, looking at all of your investments and assets and loans and kind of calculating, well, what are you worth and how are you doing? Are you making any progress year over year?
Yeah.
And I think this is something you should do every year so you can track your progress. And really what you need to pull together would be all of your bank statements, investment statements, your retirement planning information. Of course, we need to give ourselves credit for our houses and our cars. Those are assets. And then on the loan side, list everything, unfortunately. Credit card balances left over from Christmas and, any kind of car loans, mortgage loans, and then assets minus liabilities equals your net worth. So it's a good time to do this.
Yeah, well, I wish I would have known this last week. Honestly, I've got to go back and redo some things. When you're looking at your bank accounts, any rules of thumb as to how much cash you should be keeping in them?
There is a rule of thumb. There's kind of a range. We usually recommend that you have at least 6, maybe even up to 9 months worth of your monthly bills set aside in a liquid account, a money market, a savings account, something like that. What you don't want to have happen is the market to go south and you have to all of a sudden sell to raise some cash. So I think it's important to have, a nice supply of liquidity.
What about investments?
Investments, this is a great time to kind of aggregate all of your investments, whether that be taxable or non-taxable accounts, and really look at, how are you invested? What do you own in terms of stocks, bonds, cash, and then even within that, subsectors, like how much international do you have and that type of thing. Because as we've talked about before, the markets don't all move in lockstep. Some areas do better than others, and you need to make sure you're focused on what your risk tolerance is. If you're a little more conservative and the stocks have run up, this might be a good time to trim some of that and redeploy to more conservative assets.
And then what about things like retirement and loan and debt, that sort of thing?
Sure.
How should we be looking at that?
Yeah, there's 2 areas. As far as the retirement side of things, what I often say is, take a look at what you're currently having deducted from your paycheck to go into your 401k, for example, and try to up that if you can. Try to increase that amount. And certainly as you turn 50 or older, the government allows you to defer more, and so I think it's very important to try to continue to do that. And also I think it's important to look at how will your investments be or how will that cash be invested?
Right.
Your future contributions. People often forget about that, and so a lot of plan advisors will come on site to where you work and help you, guide you through that. As far as on the loan side of things, and this is a big one, what you really want to focus on here is, any interest that you're paying for loans, is that tax deductible? And obviously credit card debt, those tend to be the higher interest rate type things that aren't deductible. Car loans many times aren't. And really, if you look at the real estate market's improved over the last few years, and so a lot of people are in a better position today, and they may be able to take out a home equity loan and perhaps pay off some of that debt that's at a higher rate or is not deductible, and it may actually free up some cash for you so that you're able to reduce the debt quicker.
Yeah, a lot to take in. Quickly, you have a couple of websites that you recommend that we check out.
Absolutely. I think it's important to look at your credit report. There's a site, annualcreditreport.com. We don't want any identity theft problems. Mint.com is another site to help you with cash flow, and with the goal of really getting organized and setting those goals and achieving them.
All right, I'll be checking those out.
Okay.
I'm sure a lot of other folks will be too.
Great.
Thanks so much, Mindy.
Good luck. Thanks.
Allie, back to you.
Great advice. Thank you, Kelly. Mindy?